Good afternoon, everyone. Thank you for sticking with us for the end of the last session of the day today. We promised to have an informative session and keep everybody entertained, or at least Matthew will do that before we go on to our live event tonight with the gala dinner. So we're here today for asset retirement obligations, requirements, and technical solutions, and we have the two Matthews from Psd Citywide here to present. And first, we have on the right side of your screen, Matthew Dawe, who's the co-founder and senior vice president of Psd Citywide. And as senior vice president, he's responsible for all business operations, people, and technology at each level of the company. And he's focused on ensuring the sustainable service delivery and development of advanced differential asset management, budgeting, and GIS solutions for public sector clients. And he's also the current board chair for the Canadian Network of Asset Managers. Then we have the other Matthew sitting in Victoria, Matthew Hartney, who's the General Manager of Financial Advisory Services for Psd Citywide. And his role, he oversees the services provided to the public sector. He's a CPA CMA and has a master's in business administration, has served on various public sector clients across Canada as an external advisor. And he is one of you who did work as a director in government before he was working with Ernst & Young as well. And while having the two Matthews here is great, let's face it, Matthew Hartney's daughter, Charlotte, stole the show last night at the cooking event, and we would much rather have her here today, but we'll get some more technical content out of Matthew. Aside from all this, I'm sure this is going to be a great session. Us at BDO have enjoyed working with the two Matthews and their team. Their approach has always been fantastic to work with, and I'm looking forward to hearing what they have to say. With that, I'll turn it over to the two of you.
Excellent. Thanks for the introduction, Mario, and really appreciate it. I'm just going to do a really quick overview of Psd Citywide and sort of who we are, what we do from both a consulting and software perspective. So on the consulting side of things, certainly our major focus is on asset management, financial management, budgeting, and GIS. And the unique sort of part that we've brought to the sector is really trying to combine both the consulting practice with then the practical solutions to implement that and put that into place. So on the software and the Citywide side, we have enterprise asset management, enterprise budgeting and financial reporting, permitting, GIS, and CMMS, or operations management. So tying together a whole bunch of different services into one platform, and then having the consulting services to support that. That's kind of the very quick elevator speech. We can get into the more exciting stuff for the AROs. So I will pass it over to Matt Hartney to continue to go through that.
Thanks, Matt. And I trust everyone can see the slide deck here and the timeline, knowing that we're live. We should maybe also say thanks to Mario for those kind introductions, and so make sure I go also to say thanks to Kayla and Erica at GFOABC and the board. It's really impressive to see what's happening right now with this conference virtually at GAIN. As we all know, people are doing an amazing job at this event. It's really impressive, and last night was a testament to that. Everyone's getting together, and thanks to Mario and BDO and the folks there for that get together. There was something else that was interesting last night that I hadn't realized. A certain someone had mentioned that the three-letter acronym that's being discussed is like a bad word right now, or a bad acronym to say, and that if you said it, you had to drink during the conference. So I'm going to refer to it a lot as PS 3280, or use the standard number instead of the ARO, and/or we'll have to say for at least the next hour, it's a safe place. We can talk about AROs, it's off limit. After this, going into the gala tonight, feel free to, drink every time AROs are mentioned. Maybe we should refrain from doing that during this next hour or so. Sincerely though, it's like, where does this come from and why are we here? And it goes back to 3150, and everyone now has that ingrained in them about the experience. And for me personally, I was in Ottawa at the time in 08, 09. And the idea of drastically changing our balance sheet, right, the statement of financial position for governments, was such a big monumental deal. And it wasn't actually really long after that that this concept has come up. And the intent was to capture retirement costs for major assets for government, right? Meaning the assets that have significant cash outlays at a point in time related to the asset should be captured when we acquire it and be booked and put on the balance sheet with an offsetting liability. So at the heart of it, that's what we're trying to accomplish. The lessons learned, though, we've all been kind of reminiscing about this, and we're thinking back to it, is we saw so many different examples of how governments adopted 3150. You know, from me, myself personally, there was some governments that had a plan that was like a 3-year project, and to review all sorts of asset data and details with big project teams. And they took the implementation of the standard that seriously, all the way to, I'm sure some may know, where there was others that, you know, at the 11th hour, maybe weren't really necessarily prepared for their statements in 2009, and auditors had to step in, and people panicked, and they had to, you know, just get as good a data as possible into some spreadsheet. And, you know, maybe we have to admit that some of those spreadsheets are still around to this day. You know, we often see it with a lot of our government clients. You know, you'll notice some of those ones where you find an asset that says 1980 additions. You're like, well, what exactly is that? You know, is that an asset or a bunch of assets, a group of assets? What are we talking about? So the key here to take away today is that we're fortunate with the extension on time, but start, like, really think about this as a key activity to perform, and you're not alone. It's not just you. It's not just finance people. It shouldn't just be a finance person working alone on this, but get started, get people involved. And it'll be a theme as we go throughout this session. You'll see what I'm talking about. And so, I mean, I think the acronym has almost become cliche, but what exactly is it? And so we got this content for everyone to just break it down into what those words really truly are, representative of what we're talking about, right? We're talking about the asset, looking at our TCA for us, in this case, for public sector. And there's a retirement of the asset, right? The thing is no longer going to be in use some point in time. And then we have an obligation. There's a liability, right? We're going to say there's actually in the future going to be a cash outlay required for this. The other key term that maybe less being used right now is the other side of that entry, the initial entry, ARC, which is the retirement cost itself, right? And this is going to tie and link back to really what the board, I think, has tried to instill with public sector, is that we're trying to get us to think more about really the life cycle and asset management, right? That the cost of the asset isn't just the initial purchase, right? That we want to account for and be mindful of. There are other real costs to be incurred when we build an asset, when we set something up, right? An obvious one is landfills, because I think many governments that have had, or if you've dealt with landfills, right, that you're already kind of accustomed to thinking about this a bit and understanding that there's a big cash outlay, or there's something that will have to be done when we close that landfill at a point in time. And so this is how we've been thinking through it and talking about this, right? It really is, it's the life cycle of an asset. And we're now just being asked being forced with 3280 to say there are some costs that we haven't captured yet. We haven't picked these up, right? And that they're future estimated costs, sure, but it's still a key part of the asset. And that's what we're changing, right? That's the big change to our balance sheet, the financial position. You know, we appreciate with this image that basically the only thing in this image right now that we don't really think about or account for is those retirement costs up front, right? I mean, I appreciate that currently under the current approach, if that were to happen, if you have retirement costs today, it would go straight to your statement of operations when or if it was being paid out. But we're not thinking about in advance and capturing it in advance when we have those assets. Everyone talks about examples, and I appreciate across the country. I mean, it's a key thing to think about because it depends on what type of entity you are reporting under PSAS, how this new standard 3280 is going to impact you. And so as our group, we've been trying to talk about some that would impact you know, working in municipalities in British Columbia. And so these are some of the, I'd say, more common ones that people are thinking and talking about. You hear asbestos a lot, of course, and asbestos is certainly a common thing to be addressed and to be thought of for the older buildings, but it's also in the pipes, right? I mean, the things that are less visible often get overlooked, and similar issues were happening with 3150. And more and more people I've talked to in public works is, yeah, there's apparently real and big costs to removing a lot of old underground pipes, water and sewer that, depending on the age and where they were installed, may have asbestos in themselves or other contaminated materials. Like there's a lot of replacement of lead pipes happening in Western Canada right now. Landfills, as we know, it's a very common key example. There's unique contractual ones, and I'd say another one that for me personally on the island here and throughout British Columbia is forestry. Forestry is a key industry. So any governments that are involved with forestry, understand that there's requirements for reforestation and real cash outlays to do those activities. And that's an interesting one too, because that one may be governments thinking about how to capture those costs as part of a land asset, even if that land asset's not depreciating potentially, right? So these are just a few samples of things that what we're seeing and hearing. There's going to be many others, right? There's going to be a lot of unique things, much like the difference in variances and types of assets potentially that an entity or you could be dealing with. There'll be different types of AROs to have to consider. So where the heck do we start? And I'm going to start quickly with showing you my passion, which is the statements themselves, quite quickly, because this is not a new concept for accounting, and it's not a new concept, globally. It just happens to be a new accounting standard that we're dealing with here in public sector in Canada. So you don't have to go and look very far to find all sorts of great examples. And I've just pulled one simple one that I had access to from industry. That reports somewhat similar, but it's not PSAS. Keep in mind, this isn't PSAS, what we're about to look at. With that being said, I take any chance to talk about the balance sheet, as people may know about me. So I'm actually really excited about all this work because I'm excited about changing the balance sheet, adding new line items, and helping implement that for a lot of folks. And so this is what we're expecting, right? A new line item under liabilities that's never been there before, in short, right? And if anyone has landfills, you appreciate there's going to be a change there, of course, in how you're reporting that line item potentially. So this is monumental, though. And you start with that mindset to start thinking, okay, what are we working towards? We're going to say, you can start even next year to say, I'm going to have a new line item on my balance sheet that I'm going to have to start thinking about. Not necessarily we have the numbers yet. We're not ready to populate it, obviously, but formatting wise and what we're working towards. And then in this example, you can see how they have dealt with it with note disclosure, right? So you're going to have new note disclosure. We're going to have change in accounting policy. We're going to be discussing things that are applicable to your government. And you got to start now. Start thinking through these things. How are we going to present it? How are we going to write this up? Not that everything in this note, again, is applicable to you, but you can see some of the things that will be, of course, that because we're dealing with estimates in the future, we all know that these numbers are only as accurate as we have good information. And so these estimates are also going to change throughout that life, right? Throughout the life of this asset and the use of the asset. These are things, so this is going to become a new annual activity that we're going to be doing and thinking about. And you want to be well set up for it. So in short, what's our impact on the balance sheet? Well, we can see what we're going to do here, right? I think everyone has a basic understanding of this now. If we're going to increase and add this ARO, a liability, we're increasing the asset value, right? So what we're saying is that asset, in some ways, we're saying that it didn't capture all the costs of that asset, and so the asset value is a bit higher. It goes up. Statement of operations is going to have impact too, obviously, right? We're going to have expenses that we haven't had before. That's part of this accounting. So in this case, they've chosen to show it within a certain line item called financing and interest. I appreciate some, and you can see there's a depreciation and amortization line separate. So I could see some governments may choose to show this as its own unique line item, right? We could start showing an accretion expense as a line item unto itself. And or if you report your expenses by services, you might have accretion expenses throughout your services, right? And then you'll deal with the note disclosure. You could have something like this, where they're showing the actual accretion of that ARO in a note. So these are the things to start thinking through. So in this case, there's a couple of note changes. You're gonna have changes to the face of the statements, of course, impact to other statements. And here in this case, there's an example of how they disclose, they show it on a change in cash flow. So it's gonna be a new line for us to deal with, new note disclosure. And you can see here our impacts, right? So annually, we're gonna be dealing with this all the time now going forward, not optional. And we all understand that first part, that top part, how our TCA values are booked and are depreciating over time. We book our amortization expense, right? That's we're comfortable with that straight line method in most cases. It's the other side that's new, right? So we can add that increased asset value, but on the other side, the liability side, this is the net new thing. And you see by these shapes of the arrows, they're meant to represent the fact that it's growing, it's building. We're building the liability over time throughout the use of the asset. At the end, its accretion schedule is accreting to the point that what we expect to actually spend in cash outlay in the future. And so what are we going to do about it? I hope at this point I haven't gone too fast and that some of this stuff is, and the terms I'm using are sort of common nomenclature so everyone understands. And if there's something I'm saying that isn't clear or you want to discuss further, please put it in the chat. I know Mario's gone and he's going to quiz us with some tough questions here as we get close to the end. So just do this. What do you think? Is that fair approach? This is a bit of a shout out to BDO. I believe this is one of their BDO diagrams for helping understand what 3280 is about. And it is, and it's very factual and it's good to follow this flow chart. However, what we want to do here is really get into how are we going to do it? How are we going to actually implement 3280? That's a helpful guide and it can be used as a tool. It's a great tool. But what's our plan? How are we going to do this? And that's what I'm excited to get into today. So when I think back even to 3150, as I said, and what we're now adding and about to do to the balance sheet, don't push this out. So what I mean by that is don't delay it to the last day. This is almost like a checklist of ways to think about going through this. There's an important thing to be said about preparing for this with a team of people, not just feeling like one individual's involved. And that team of people is going to be other people in the organization that know the assets better than finance should have to know them. It's going to maybe involve external folks, your auditor, of course. You could have multiple people internally, externally to help on these things. I know there's many folks out there that are willing to do this type of work to support governments that don't have staff internally. And then you're going to, with that team of people, to go through and start reviewing TCA, identifying these things and what are our assumptions and estimates? How are we coming up with these numbers and why? And then ultimately the part that finance really gets involved in is at the end here. Finance needs to own the preparation. And so what we're about to get into, and I'll turn it over to Matt Dawe shortly, is you're going to get to see, and I'm super proud of, I'm sure he is that how we've designed it in a software solution that gets people away from relying on Excel, things that we know can have mistakes, and can accomplish almost every step along the way, right? Other than, of course, deciding who the project team is. And so this would be a type of scenario we thought of. There's so many examples. We appreciate everyone's going to have to review their buildings. That's there's going to be things that have to be done here, and in some ways a checklist of reviewing all the assets. So Matt, I'm not sure if you got this exact scenario ready, or if I'm surprising you. If you want to turn it over at this point.
We're good. Yeah, I can run through some of that for sure. Let me just grab control here.
Let's see what it looks like in the system.
And just confirming we're good, you guys can see. Okay. Thanks, Matt. And yeah, I appreciate it. And it's sort of, you know, we looked at this a year ago, maybe even more than that. And, you know, Matt Hartney walked into my office and said, this Aero thing's going to be huge. We need to do something. And so that was kind of the start of it. And how can we incorporate this into a tool? So as some context, we work with about 450 municipalities across Canada and help support all the reporting on the TCA, so PS 3150. So we have the core asset base, the financials, and all the numbers there. So it made a lot of sense of how can we incorporate this in, make it easy as an approach, kick out the reports that are required, and have all of those marked all the way through, and really expedite this process so it's not, oh my gosh, where do I start? And I do think that's probably in people's heads. How do I get this into my reports? How do I bring this in and combine it with my TCA? So we took a lot of time to go through the design stages, looked at what the requirements were for the AROs, and then really built it into the program in a way that we think is going to be really effective in terms of implementation on a go forward. Whether that's you're simply using it as a secondary system to help support just AROs, whether you're using this for AROs, TCAs, and it is a full enterprise asset management system, it does give you that ability to extend it into other areas of the business. So what I want to provide is the example and walk through that in terms of what Matt had provided there is a building. It's an easy example to walk through, likely one of the scenarios where most municipalities are going to have to take a look at, especially some of the older buildings that are in place. So, but you have to do this for every asset, regardless of whether or not you know there's an ARO there. It could be for your fleet, for everything else. It's just, yeah, it's been reviewed and there's not one there. At least that marker is there. It's noted that there's not an ARO, and then those can get picked off very, very quickly. So in looking at this, I have a database here that has about 25,000 individual records in here that I need to go through. So what is the best way to start? Well, in our drop down here, I can go through and start to look at the ones where I know there's likely not an ARO. So I can go in and let's say I select vehicles, and I'm going to go through and look at specifically a certain subset of my vehicles. So there's 3 here. I know there's not going to be any AROs on these. They all went into service in 2015. And so I can very quickly go in and say, I'm going to create a flag on this to say that this ARO has been reviewed. We're going to review this today. And this can be something that you're doing internally for a lot of these. It's going to be some for that an auditor potentially is doing that. And then I can apply that. So right away, very quickly, 3 of my assets gone off of my list. I mean, I can apply this to 3. I can apply it to 100. So all of my vehicles in one shot, all of my equipment. So there's going to be some very obvious areas that you can just start to apply that these have been reviewed. The other examples are the ones where you do know there is something that you need to look at. So I can go through, as I said, I can do my street lights, I can do my technology equipment. So you're picking off and getting this list of 25,000 down to say 1,000 that really needs some type of potential review. So from there, I might go into buildings and use the example here. So I go into my buildings, we have 96 records. So again, another quick way to start to filter through these assets is likely, the asbestos around 1980, 85, that's when we figured out this stuff isn't really great for you. So, anything newer than that, there's a fairly safe assumption that there's maybe not an ARO. You might give a little bit of buffer or room there, and maybe it's anything greater than 2000. you pull that in. So now I'm down to, I have 60 individual buildings here. They've all been constructed 2000 and forward. I'm going to do the same thing and default these and say, okay, all of these I'm going to say is we've been reviewed and there's no ARO that we know we need to identify here. And then the flip side is all the other ones. So I'm going to take a look at all of the ones that were prior to 1980. And maybe the flag that you're setting on these ones, I go in and I say, okay, I'm going to flag these and say the ARO is reviewed or an ARO has been identified. So I'm going to walk through an example at an asset level. This is in this section here is where you can do it on bulk. And I'm going to do it for 100 assets here, 50 here, 200 here, to start to work through that list. But let's say we're going to go into an individual one. So I'm just going to go into an administration building here that I've set up. So this falls in line with the example that Matt was providing. So here's an asset that went into service. It's our administration building, 1980. Historical cost is $1 million. Useful life on this is 60 years. We do have a replacement cost on this, a risk, condition. And at this point, ARO reviewed, no. ARO identified is not applicable, and it's not pending because I haven't even reviewed it yet. So I can start to create a list of which ones are reviewed or not. So going into a record, we have several different flags already in our system, from contaminated sites to heritage buildings to leased. And we have these new flags down at the bottom. So this is actually something net new that we've just rolled out in the last couple of weeks for our clients. But let's say the ARO is reviewed, yes. So I'm going to review this today. So yes, we are reviewing this, done by myself and to be reviewed. Oh, this one requires some work. The next idea is, okay, we've reviewed it. Was an ARO identified? Yes or no? And in the case of a yes, I'm going to say, okay, what are the details here? So we've added a couple of different things, what we've called ARO class, as well as an ARO category. So if I'm going to walk through this, I'm going to say, okay, this is something that is legislative. It is reforestation, it's asbestos, it's a landfill closure. So you can identify what it is, legislative, contractual, any other legal obligation. And then you can also categorize that into reforestation, any of these. And this is all customized for depending on the client. Asbestos, when is the date that we've identified that? It's today we're looking at it. It's identified by myself. And we have a couple of options here. So depending, you may walk into that building and say, yeah, you know what? I know there's asbestos in here. You've had someone who knows about it come in with you, and it's there. That being said, you've identified there is a retirement obligation, but you're still waiting on evaluation. So what would it cost to remediate that? So in this example here, I may say it's pending if I don't know that, but at least I've marked it as there is an ARO that we've identified here, and it is now pending valuation. So when I go back and I start going back through my inventory of assets, I know which ones have an ARO identified, which ones have been valued, which ones haven't, and I can start to really filter through that stuff.
Matt, if I may, I mean, I think it's an important point just to emphasize here is that it's also the mindset of what we're trying to help, and what we hear is feedback, right? That this function of the software is meant to allow for the project base, that this is being done over a long period of time, right? Potentially, and various people are involved in it, right? And various people may review different types of assets internally or have external folks. And that this is, and I know you're gonna get there, but obviously to show that there's a really important intent here on initial adoption of the new standard, right? Like some of these things, obviously years from now become more routine, but we've made sure to include in the system adopting the new standard as a massive exercise, and how all this data then is captured for audit purposes to help you.
Yeah, thanks, Matt. Thanks for adding that. Yeah, we've tried to have a step process in place so you do have the ability to just mark things as pending. It's just been reviewed, it's been identified, and they're all different, say, ARO statuses. And it lets me then go back and you can implement this over the course of the next couple of years. Next step, so if I go next, this is the valuation side. So what is the cost estimate? In this case here, I do know what it's going to cost me as an estimate. Maybe it's 100,000. I go in and I can set in my retirement inflation rate. And I can set my discount rate or borrowing rate. So this is so that we can factor it forwards. We added this, which is our likelihood. So this was something interesting that when we were going through the documentation that we felt we could add in, that adds a pretty interesting piece that says, yes, I have a $100,000 potential obligation here, but what is the actual likelihood of that actually being realized? So you can identify it, but you can also weight it essentially, or factor that in that says, well, there's only about a 50% chance that we're going to actually realize that, and that'll have an impact on the cost that you're recognizing in your statements. So this does allow you to walk that through and actually append a likelihood. In the example of buildings, it may be in that window where asbestos was starting to not be allowed to be used. You might have a less likely, so anything from 1975 and before, it's probably by default 100%, but maybe in that window between 80 and 85, your likelihood is 80%, and then anything beyond 85, you're down to a 50% or something like that. So that's kind of the intention of that likelihood field. We can go to our next. And if there was any of your coding, basically for your account codes for accretion expense, your amortization expense, the cost expense, your liability. So I can select all of these and I hit save. So once I've done that, the work from our end was really to build it out. Okay, now I've reviewed this. I now have this asset retirement obligation section within the application. And what it's gone through and done is it's entered in, oh, I didn't enter in my date here, sorry. It's entered in the cost, a discount rate. And so it will go through and do all of the calculations that we need. So we have our cost estimate date, which is today. It's a legislative and it's asbestos. We have our periods to retirement. We have 100% likelihood in this example here. The discount rate that we're using, or the inflation rate, sorry, is 2.5%. So our ARC, asset retirement cost, which Matt talked about, at end of life is going to be $158,000 with that inflated forwards up to the end of the life of the asset. And then our discount rate at 4.5, that's going to bring it back to 1980 and giving us a calculation of $11,300 is what our initial ARO is, that we're going to be adding that value to the value of that $1 million asset. One of the interesting things that we looked about, and Matt talked about this as well, is, okay, this is our estimate right now. We're potentially 18 years and maybe even longer away from even realizing this or recognizing this. And so it's likely there are going to be some points in time where you need to make adjustments to that $100,000 estimate. You get closer to realizing it and you're actually out tendering for it or getting those definitive dollar amounts, and it's $150,000, $160,000, $200,000. At that point, what we've added in is we can do both additions, which would be increasing the valuation on that ARO, or a write down. Maybe it's far less expensive to remediate that asbestos in this example here. There's way less in the building than anticipated. So what's neat is you can go into an addition, and with the way we've defined this is I can go in, and this would be a betterment, and it can be a betterment to the asset itself, or it can be an ARO adjustment. Okay, here's my adjustment. It's now 2030. We're going to make that adjustment. Here's the description, and how much value am I adding to that ARO, that original cost. So it might be an additional $50,000, and it will actually go through the whole process and then account for that adjustment, or up or down, whether that's a betterment or an addition, or right down to the actual original cost there. So we thought about that moving forward. That was a fun one to sort of incorporate into the system. So from here, this is, go ahead, Matt.
If I may, Matt, I was going to just to recap there, that the importance of, which I get obsessed with, is like the documentation side of things, right? And, kudos to you and our developer team to have that ability in there, so that it's tracking all these estimate changes over its life. Like, it's set up to do that already, even though it's not even like in our forefront at this moment to adopt, right? So it's set up for success going forward is the key there.
Yeah. From there, that's basically all we've needed to enter. And from there, we actually are producing then all of the actual financial numbers that are required. So we have two things in here. We have, if I go in and let's look at our just cost and amortization on the original asset itself, the $1 million. So $1 million costing. If I scroll across, I have all of my amortization, accumulated amortization expense for that original asset. I can then also now look at, well, what about the ARO cost and amortization? So here's now that $11,000 that's coming through with my expense, back adding this to the value of it back in 1980, and the full schedule all the way out until 2039 at the end of the life of this asset. And then I also can look at the Aero accretion. And I have then my accretion expense all the way again from starting in 1980 all the way out to 2039. So arriving at our expected or potential $158,000, and also adding in that $11,300. So if I go back to our retirement obligation page, we are recognizing the initial ARO, the $11,300, and we're also then accounting for in our accretion with the $158,000. So these are our two numbers that we're working off of. We've added tooltips for everyone to look at, hey, what do I enter where? And at the end of the day, I've gone through and I've done this for one building. We've done this if you have the valuation and that cost in a matter of a few minutes, you save it and you're good to go. So in terms of walking through this, we've tried to build it as effective as possible to the point where the system is then generating and producing all of the financial numbers required to then get flipped back into your core year-end reports and say, well, what does this now look like? And I'll flip over to that right now. So I'm just going to save the work that we've done here.
If I may, while you're doing that, Matt, just for everyone's benefit, like for appreciating, there's lots of folks here that probably have never even seen our system before. What Matt's been showing is in the asset, think of it as like an asset card, the asset details, right? So that you're focused on entering all these details within that specific asset. And now we're going to go look at, okay, now from a corporate view, once all those details in the database are captured for every single asset, now you get to the power of the management reporting or the audit reporting, the reporting that you're going to need, really, especially for initial adoption, but also annually, right? When you're going to want to prepare and adjust your accretion schedules and adjust those. We're used to adjusting the amortization schedules, of course, but getting our new updated corporate numbers and viewing it across all assets.
Yeah, the example I was going through would have been one particular building. Obviously, if you went through that process for 10, 20, 30, 40 buildings, you have the individual sort of values at the individual asset level. And then, as Matt said, the more of the corporate reporting, I can come into the financial section here and I can get into our amortization reports. And in here, it gives me some flexibility. So I can go in and a couple of different things we wanted to look at was we wanted to add some flags that let you start to pull out and look at what assets. So which assets in my database have been reviewed. So if I click in this and I run this report here, I get a list of the ones that have actually been reviewed. So those 3 vehicles that we marked, you can see here they are, they've been reviewed, perfect. So I can pull out the ones I've done. If I go back I can go into which ones was there an ARO actually identified. Again, run that report. And here, if I run that, we can see under buildings. I identified one before on Centennial Arena. I've identified one at the Volmer, like the rec center. And we've just done this one for our admin building, $1 million admin building. So I can also understand and get a sense of where they have been identified. We also have the option to look at where is there an ARO that's not identified, but it had been reviewed. And then we can also look at any that have a ARO valuation pending. So we've gone in, we've looked, we've figured out that there is asbestos in the building in this example, but I don't know what it would cost us to remediate that. So again, I can run that report and I can find out very quickly, okay, at the Volmer complex, I can see this is one of the assets that we've identified. There is asbestos, but I have not entered in any of the valuation side. So each of those are there, and that's designed to let you go through and create those lists of, okay, what do I still need to do work on? And where do I need to still add values? Which ones do I still need to have, it's reviewed or not reviewed, identified, not identified. So let's go back into the final, what that report looks like. So when I run this report, what I'm going to do is I'm going to go through and I can run this specifically for buildings, and I'm going to generate that report. So right now, what we're looking at is the pure PSAB 3150 reporting piece that says, here's my opening costs, closing costs. Here's our admin building at that $1 million for 2021. And if we walk that all the way through our admin building here, we get into our accumulated amortization, our net book value, everything is there. The other things that we want to look at are, okay, now let's look at just the ARO cost and amortization for all of our buildings across the board. And so this would be the combined look of, this is just the ARO side of things. So here's the admin building. I have all of my amortization expense accumulated, and as well as our cost at 11,300. And then the last one is, well, now take those and I want to combine both my asset amortization and my ARO amortization now together into one schedule. And so here's what that final sort of report would end up looking like, with both of those things combined into one report, the original $1 million asset with now the $11,000 additional ARO cost added to that, and both the schedules, the ARO schedule and the asset amortization schedule, combined into one that you can now report across the board for all of your buildings, all of your fleet, all of your landfills. And then, so this gives you that overarching view of, here's everything combined back together into that final report to help get into your statements.
And Matt, again, back to, I'm trying to help empathize with the folks that haven't seen it before. There's hundreds of governments that are using this exact feature right now as their subledger for TCA currently, right? Like that would be a key thing to know. Like what you're showing here is actively being used by most of our clients on an annual basis already as their TCA subledger for what they report in TCA. And so that what Matt's demonstrating is that we've also then built the other side too. So now you're having an updated complete TCA register with your new ARC costs and that amortization schedule. And then you're also having your accretion schedule in the software built for you to run as your subledger for the liabilities.
Yeah. Thanks, Matt. So that's really the amortization side. And then we've created a separate report specifically for ARO accretion report. So I can select that, run my report here, and I can run this just for all of my across the board. Again, here's my buildings. Here's the admin building that we were looking at it's a legislative Aero class, it's asbestos. So if I had all of my buildings here, you could see each of these are going to be broken out what it is, legislative, contractual, asbestos, and what we're looking at across the board. My opening balance, opening accretion, my accretion expense, as well as my closing balance, and working all the way towards that basically that 158,000 that we'd identified as our final cost. So it gives you basically both sides of what you would be required as that year-end reporting, both for your amortization to recognize that, as well as the accretion. And we've tried to also go through that process and empathize with, okay, I have in this example here, 25,000 assets to deal with. Where do I start? And it's go through and start to pick off the ones where you potentially know there's nothing. And then maybe then getting into the ones as simple as I looked at with the buildings that says, okay, anything, 1980 and below, we're going to say there's potentially an ARO identified, and it would be pending potentially valuation. So now you're eventually going to get down to your pick list of, okay, here's the ones that do have an ARO that has been identified and which ones need valuation. So you've taken the 25,000 assets, narrow that down to maybe a few hundred that you have to go and spend the time on figuring out a valuation on. And then getting that then into the system is sort of the process that I just walked through with you today. And then your financial reporting is there for year end to walk through both your original TCA reporting, but also combining in the ARO sort of process and exercise that's going to be occurring over the next couple of years. So it takes what probably is sounding like a fairly daunting task to a lot, and especially a lot of the clients that we've talked to, and gives you a bit of a starting point and peace of mind of, okay, there are some tools beyond Excel and that will help through this process and make it hopefully a little bit easier as you're starting to move towards getting that into your books. Go ahead.
You're still. I was going to see if I was going to ask you to push you a bit to demonstrate the years in that accretion report quickly. I know it's a simple in the accretion one that you were just in. I know it's seemingly simple, but I know the effort that's gone into it, right? So if you think of a government that is looking to say 2022, you put in 2022 as potential early adoption. Once they have that data, you can run and see that impact right away. Like, what would that impact our books at that point? Or it's like, oh, wait, now it's 2023, and you can run it again. Like, it's just once that hard work is done and the data is there, the design of this report and to have that the roll up function, the way this works, where you can drill into assets but also see it rolled up for your macro reporting and initial adoption. I think it's brilliant, and I'm really impressed. So kudos. This can you have your reporting year up at the top, and it just allows you to change it to any year. So, and it will automatically do the calculation. So for in 2028 here to 2031, we run that, and we're going to see that continue to grow. And as we work towards that closing balance, as I said, of that 158 that we had identified on this particular admin building that's sitting there. So it's all year based. We have the full, because at the asset level, we have the full schedules from in-service date to expected retirement obligation date or end of asset life. You can run a report for any given year and actually start to do some projections on what is that going to look like for the next 5, 10, 15 years. So lots of flexibility there. Beyond that, those are kind of the major portions that I wanted to look at in the system. There's probably a few other things that we're going to continue to add and work through as this starts to roll out and we get feedback from clients, but I hope everyone enjoyed the presentation, has a little bit of a better sense and maybe some peace of mind that there's some things out there that can help through this process. But I'd like to thank everyone, and hopefully we brought some value in looking at what's coming at us. If we're back at the slides here, I mean, Matt, I have to say, as an accountant, that's my trade profession. I'm not a software engineer or programmer, but I think if it isn't obvious, you make this look easy, the software I think addresses this and makes it look easy, but it's certainly not. When I've now had the privilege of joining and working with you and seeing how this gets developed in a software enterprise asset management system like this, a lot of time and effort, and then there's some painstaking things along the way to get it to make it that simple for people in the system. So you and our programming team deserve a heck of a lot of credit for the last year of effort, man.
Yeah, well, we tried to take the hard work out of it. So yeah, it's with lots of help from a lot of different groups and lots of feedback for sure.
Yeah. Well, I mean, as I said, I'm excited for the changes to the balance sheet. I'm excited to implement 3280 and help as many clients as we can. I think that this topic is going to be monumental in the next couple of years. There's significant effort, and I think we deserve a bit to brag. I think we're on the forefront here in Canada with this standard of PSAS in an enterprise asset management system. I'm not seeing it with many other solutions. Right? So, yeah.
I guess back to you, Mario. If I don't know if there's any questions coming through.
Yeah, we've definitely got some questions in the chat here, and we'll go through them. First I want to thank you guys for the presentation. I think it's, as Matthew Hartney was saying, it's good to see that there are solutions out there. I know the delay of the standard has given everybody a bit of a breath to relax, and now it's like, I guess we have to kind of get back at it. But it's important to know that these solutions are out there. And I want to go back to one of the points that you made, and it talks about how the system is ready for adoption, and so much is in there to help this whole project go through. One of the things that I've been hearing, and when I hear how do we get our councils on board and how do we show the value, is that we need to have a tool out there that allows for us to go in and say, you know what, not only are we going to go and undertake this new capital project, but there's going to be retirement costs associated with it. And this system will allow the capturing of that data as you're going through, which I think is more and more important as councils and senior management get used to asset management is here to stay, and we need to know that. So I saw that as a positive outside of just being the initial adoption. But in any event, we have a handful of questions here. Most of them are linked on the software and the platform itself. We'll start with those. There are some technical questions in terms of the standard, and I'll lob those to Matthew Hartney, and I'm happy to jump in if you want on those. But the first one, and burning in BC, with the ministry going through and changing the requirements of LGDE, will the reports kick out something that will fit with LGDE Part C and the new requirements there?
If so, and great question from Ian. I'm not super familiar with the requirement there, and maybe Hartney, you're a little bit more familiar with it. But I know from our end, when it comes down to the software development side, whenever there's any, because we deal with just municipal clients, whenever there are any types of changes in any regulations, legislation, we're actively looking at what those requirements are and then making those updates in our system. So if it's not there right now and we can look that up and say, okay, we need to add this piece in there. That's something we can easily accommodate in our software. And maybe Matt, you can talk a little bit more to it.
In fairness to you, yeah, Matt, I think that, and Mario, correct me if I'm wrong, the question is just simply about the new form for TCA, the new reporting. And so in short, yeah, like that's exactly what should come out. Much like that when you're seeing those reports and the accretion schedules and the TCA schedules, those updates, that would be your core data and your numbers that would be used, right? That would be reporting to the province, much like similarly what you'll need for the audited financial statements.
Yeah, and I think that the important part to remember here, and I think going back to Matt Dawe's answer, is that we've seen a time where the ministry has gone through major changes in the LGDE, and I think it's important to know that, as software developers, that you'd be willing to make those adjustments, because when these forms change, obviously, if we have to go with manual go-arounds, the members are going to struggle, so it's good to hear that that's there.
Yeah. Yep.
And on a similar note, a couple of questions just in regards to integration. And first is, will the solution integrate with other non-PSD GIS products, or have you identified ones that it would integrate with?
Yeah. it's fully open in terms of we have our own GIS, but then there's a ton of other options. Big one being Esri. So absolutely, we have a two-way integration platform to integrate with that as a GIS solution. Cartograph. There's all different sort of GIS options out there, and certainly if a community's made investment in that and happy with that piece, we look at that integration piece versus having to use something in our software for sure.
Okay. Perfect, thank you. And the next question, similar lines, what about linking with the regular general ledger software that the municipalities are using to be able to upload the amortization entries at year end?
Yeah, so we have done that. We do have what's called an API, so it does allow you to do that. One of Matt Hartney's sort of additional reports that we're looking at here will be a journal entry report that just simply creates that journal entry for you. So that is one of the reports we had earmarked to continue to add into the program as we build that out. If you're looking for that integration piece, that's something we've done with a lot of our clients, whether all kinds of different GLs and ERPs that are out there, and happy to explore that if you have any questions.
I'll put a plug in what I know I've been talking with my clients and what councils are asking for. At least quarterly close on TCAs is, that's becoming something that's been getting asked for more and more. So as you build that journal entry report, it'd be good to see that just not only annual, but quarterly or monthly if possible. And I'm assuming the answer to this next question is going to be a yes, but can the data be exported into an Excel spreadsheet?
It definitely can. Yeah, there's a click a button that says dump it out. The screen that we were looking at when we were looking at the building, it allows you to actually turn on any number of columns that you want, so you can actually customize what you are exporting out of the system, no problem.
Okay. Another one's coming that's going to kind of go across between the technical side of things and the software side, and just because we have the three different transition options within the standard, is the software built where you could select which standard or which adoption method you're going to use and be able to rerun the calculations?
Short answer is yes, Mario. So yeah, I know. In fairness to Matt, I mean, I'm not sure what you're hearing on governments and their ambition or what their intent is. So is there a trend that you're seeing that some are moving towards more than others?
I think right now everybody's more focused on making sure that they're getting the data there. Obviously the modified retrospective is the one that kind of is leading the way. Full retrospective is going to be challenging to go through. But even the province of BC hasn't announced formally what it's going to require for its government reporting entity, even though that doesn't apply to municipalities and local governments. I think it's important to see what the senior levels of government are going to be applying as well.
Yeah, so in short, I would sum it up this way: is that's part of our exercise in building those journal entry reports as well. So I have like an adoption report, right, which is pulling data in different ways.
Okay, that's perfect. All right, well, that takes us pretty much to time. On behalf of the GFOA, I want to thank you both for filling in. I've been in the last time slot of the day, especially with Matt being 3 hours ahead of us. Always a tough one, but we had 130 plus online. So thank you for everyone that attended, and thank you for being here today. And looking forward to seeing everybody tonight at the gala.
Our pleasure. Thanks, guys, and I hope everyone enjoys your virtual dinners.